Hi, everybody. Chris Englebert with Englebert Financial Advisors in Allentown, Pennsylvania, and we want to wish you a happy 2026. Obviously, that's what's on investors' minds right now, and I really appreciate all of our clients and everything that we've done for you in 2025 and the fact that you're clients and going forward. So let's get into it. This video is going to be maybe a little bit longer because we want to give you our 2026 outlook. Again, if you have my app, you might have seen the work that we did with Trade Talks, a long form video we did with Jill Maladrino. That's on my app. It was also sent with you. But I want to reiterate our view for 2026. But here's a recap of 2025. So the S&P 500 saw a gain of over 16%. This is the third year of positive investment performance. If some of you can remember, way back in 2022, S&P was down about 16, 17%. Bonds were down about 16, 17%. We have well recovered from that. And look at this chart. Remember what happened last year with the tariff tantrum in April of 2025. We had our first 20% drawdown. We then recovered from that and went on to new all-time highs for the S&P 500 and Dow Jones Industrial Average and the NASDAQ. And now in 2026, the Dow Jones and the S&P have made new highs so far for the first about 2 weeks into the new year. Bonds also made money in 2025. We saw interest rates drop from about 4.5% on the 10-year down to about 4.1%. That gave the U.S. aggregate bond index, which is very commonly used, a total return of about 7.19%. If you look at some of the other bond indices, they all were positive for the year. So conservative bond investors made money in 2025. But what do we think is going to happen in 2026? Here's our major themes and outlook for 2026. We're calling it the return to normal. And what I mean by that is that we've had a very unusual bond market, very unusual stock market. So first theme is fixed income yield curve returns to normal. What we mean by that is that over the last couple of years, short-term interest rates have been as high as long-term interest rates. That's totally abnormal. A typical yield curve, short-term interest rates are lower than long-term interest rates. And you say, hey, Chris, what's the matter with that? Well, what's the matter with that is the fact that investors huddle in bank CDs paying 4.5%, 5%. They don't make any investments in longer term investments, capitalization structures, etc., stocks, that pay dividends, or any other type of longer term investments. Well, so far we've seen interest rates slide on the short end from literally 4.25% to 3.5%. And I think that you're going to see short-term interest rates bottom somewhere in 2026 around 2.5%. So if you got a whole bunch of money in short-term bank CDs, we've been pounding the table, buying longer-term tax-free bonds, buying longer-term treasuries, and also mortgage-backed securities. Our second theme is that the equity markets return to normal. And what do we mean by that? Well, you've heard, if you've watched your other videos, we've said ad nauseum that the Magnificent Seven, those 7 large cap tech stocks, have been dominating the returns the last 2.5 years. In the fourth quarter of 2025, we started to see those returns slip, and now we think the other 493 stocks in the S&P 500 are going to do much better than the Mag 7. So again, we have to tell you that if you are concentrated in the Mag 7 stocks, Apple, Amazon, Tesla, Nvidia, Google, Microsoft, Meta, look at some of the other areas. And this is our point number 3, is that is 2026 finally the year of the small mid-cap stocks. We think that there's some big tailwinds behind small mid-cap stocks. Lower short-term interest rates help these smaller and mid-sized companies. Valuations, if you look at the difference in valuations between small mid-cap stocks and large-cap stocks, it's at a historic valuation differential. We think that money is going to be coming out of the Mag 7 and going into small mid-cap stocks. I remember way back in the 1980s and 1990s, there were years where small mid-cap stocks did 30, 40, 50%. Now, again, we're not saying that that's going to happen in 2026. We hope it does. The point is, if you're not already in small mid-cap stocks, by the time the liftoff begins, it may be a little bit difficult to get in. So we're pounding this table on small mid-cap stocks for 2026, as well as dividend stocks, which we think are going to be very valuable. Number 4, higher stock market volatility. Again, we've had 3 years of the S&P 500 going up. I'm not saying that the stock market overall is going to have a bad year, but I can see a situation where the S&P 500 is actually negative 5, 6, 7% for the year, while other indices like the Dow Jones Industrial Average, the Russell 2000, small mid-cap stocks, and dividend stocks are actually positive for the year. But there are some headwinds that we are looking at as far as concerns in 2026. A new Fed governor coming up, so there could be a Fed policy mistake. The question is, are we in a recession or not? There's some anecdotal evidence that we may be at the beginnings of a recession, but then there are some sectors that are doing very well. The big thing is that we continue to have high valuations in certain sectors of the stock market, i.e. large cap growth. If investors start to flee those stocks, will they drag down the rest of the stock market? And then finally, the midterm elections are looming. We think that some point this year, there's going to be another 20% drawdown in the markets. If you remember last year, we had about a 21% decline in April, turned right around and rallied back up. If we have another 20% drawdown going into 2026, we think that you got to keep some powder dry, keep some cash on the sidelines, even though it's probably going to earn 2.5%, 3%, and be ready to reposition that cash into stocks at some point this year. So again, we think 2026 is going to be an overall good year for investors, not great, not like 2025 or 2024. There's going to be some rough patches to it. We think we are favoring bonds over stocks this year, but if we are in the stock market, we're being very selective, small mid-cap stocks, dividend stocks, special situations, and we think that's how you're going to make money in 2026. So again, you're getting this video via email. If you download my app by texting Chris E to 36260, this video will be on my app. And look forward to more videos in the coming year, and wish everybody a happy 2026.